Home prices in Toronto have dropped more than $500,000 in 6 months. We are going to cover that article because, wow, that is one heck of a headline. Then the next article that we're going to be covering is over here where it says GTA home sales down 47% and down 24% from June, 47 being last year. Those are stark numbers, but remember, sales, not prices. And then we got the next one here from BlogTO. Toronto home sales have dropped by nearly 50%, but prices aren't following suit. That is a weird one. We're going to break that down. Then we're going to go talk about the message that came out from the Toronto Real Estate Board and the president. I'm going to dissect that and what it means because there's some innuendos that are hidden in there in the latest Market Watch numbers. And then, of course, we got the Toronto property listings are being canceled at unprecedented rates. To wrap things up, on the last one, we got mortgage affordability test scrapped. Bank of England? See, there's a lot of things going on right now. And as you can see, when I just even look at the articles, you got down $500,000, sales are down, right? Then you got sales are down, but prices are moving. There's a lot of things that are kind of being thrown at you. And you just have to remember, there's a lot of things that are meant to be clickbait. Again, I've said it myself, guilty as charged, but make sure you read the article so you can actually digest it. Or if you really want, just continue watching this as I break down some of these articles for you kind of in, I guess, a shorter manner than maybe you were to read it. And if you're kind of wondering how you can navigate such a crazy real estate market right now, where some people think prices are up, sales are down, prices are down $500,000, it's all over the place, right? So if you want to get an idea of how to strategize a transaction in the Toronto real estate market right now, you could do so by booking a call with me using the link on the screen right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run a RE/MAX in the Greater Toronto Area on top of making awesome real estate content just like this for you. So the first article that we're going to be reviewing right here is from stories.com, and they come up with a lot of good stuff. So we got home prices in Toronto have dropped more than $500,000 in 6 months. Woo. Good headline. So here's what I highlighted. So the overall GTA home prices saw a 1.2% year-over-year growth in July and the smallest annual uptick since April 2020. So if you want a full breakdown of these Market Watch numbers that everyone's talking about, video for the Market Watch video, the link for the video is up here. You can click on the little I button. But what they're basically talking and alluding to about, what the $500,000, you're kind of cherry picking a stat to grab the headline, right? So it's a very great stat. And it's not about the overall market being up 1.2% year over year, because it is. But, again, talk more about the other one. It's more about that the detached home prices have tumbled below where they were 1 year ago. It is absolutely wild. And I didn't really talk about it too much in the Market Watch, but this is kind of what I'm showing you right now. So right here, you can see that this is strictly for 4 and 6 detaches, so in the Toronto area. And you can see that we came down 13% and 9% in the last 2 months. So that's all in about 23%, if I'm doing my math correctly live, of prices coming down. Now, here's what I will say about this. It's very scary. But when we were transacting in a lot of the really high-end neighborhoods like North Toronto, say Leaside, even the East End, like in Plater Estates or like Ronsonville, those kind of houses, they're pretty good. They're in really good shape, right? But the other ones, we don't know. But one of the key things you got to look for is as the number of sales dwindle down, right? Remember, we're going from like record lows of 20 year. So we went from like 8,000 sales to 4,000 sales. You could basically see over here that the number of detached sales is dropping significantly. If you scroll up over here, you can see that there's only a few instances which you actually see a 400 number in front of the sale. So you can see that in the start of this year, because January. Then you can see it also right here in May of 2020, pandemic. And then you can see it in April 2020, pandemic, and then again in the January and December months of 2019 and 2020 respectively, right? So what I'm trying to get at here is the sample size is too small. And when the September numbers and the market rolls around, I'm pretty sure the detached home prices are going to come up. Because if I were selling a home that was, call it, priced $1.5 million and above in the Toronto area, not like kind of the surrounding, call it like, I don't want to throw shade at any other area, but like not the core, right? Not by a subway line. you're basically going to wait and you move in seasonality with the school season. So you generally list the place for March, you close for June when the school year ends, and you move on to the new place right afterwards, and you enjoy summer at the new place, right? So no one's really selling in the summer seasons. It's already all done. It's the same thing in the fall, right? People always sell their prime detached homes at the peak of the market, or seasonality speaking, right? So that would be your March, April, May, and then also your September, October. So to see a number in July that comes down like this, yeah, it's very startling, but I wouldn't say call it the prime, call it Rosedale Homes came down like 13%. You know what I mean? So you really got to look at the information with a grain of salt. But if you look at other detached homes, I wouldn't be surprised if they came down, right? Because there's a lot of areas that aren't as desirable that still have really big detached homes, right? We're talking about maybe like the bungalows in the outskirts on the east and west side too, right? So if you own a detached, don't freak out. Just plow through these numbers. I'm pretty sure if you look at comps in the nearby area, it probably did not come down, call it $500,000. But it is quite startling because you got to keep in mind, at the peak time, 700 sales, pretty strong. We were at $2 million. And then we came down 8%, which got us to 1.9. And now we tumble. And we got two big starting drops going from 1.9 to 1.7 to 1.5. Because everybody thought that the 4 and 6 detached homes would kind of be the holy grail of properties, right? Meaning everyone wants there because it's the largest home, it's the highest asset class, right? Especially along the subway line. And for it to kind of, have the biggest drop, it kind of scares a lot of people about what's happening in the real estate market. And then when you add on top of that, what's happening with the kind of re-urbanization of Toronto, you would imagine a lot of families are trying to come back into the city and they're trying to get back into a detached. But again, that's not the general case, right? But I have seen properties on both sides where people have made a lot of money on a big detached and they've lost a lot of money. So those are outliers. But again, I would take this data with a grain of salt just because the number of sales is low, because the total number of sales is low in July. Then we got the next article here. GTA home sales down 47% from last year and 24% from June. So again, when you read a lot of headlines, make sure you differentiate between sales and price. Sales coming down is absolutely ridiculous. Now, what I would say is we have half the sales in July from last year. Not too bad, because last year was the record-breaking year even for July. It was just bonkers. We had the most amount of transactions ever. So to come down 47%, like I told you, we're still like a 20-year low, but it's not freaking me out too much. Now, coming down 24% from June, that's quite a lot, right? So for most kind of like casual people looking at real estate, if they understand this, it doesn't affect them in any way, shape, or form. Only real people that honestly it affects are people who are in the industry, meaning real estate agents, mortgage brokers, or even real estate lawyers and insurance brokers, because when you have less volume of a transaction, it means there's less of a pie to go around, right? So as the consumer, who cares? Like if you are watching this as a realtor, yeah, you better shape up. You got to be really good to be able to transact in this kind of market, because you really have to provide that much more value, right? Because you're just a commodity. If there's 65,000 of the agents out there and there's, I think it's like 4,000 or 5,000 sales. Not many to go around, right? So that's all that should freak out. You as a consumer, who cares? Then we got the next one. BlogTO. Toronto home sales have dropped by nearly 50%. Correct, nearly 50 because, it's 47. But let's round up, who cares? And then but prices aren't following suit. So if you watch the Market Watch, you'll be like, what are these guys talking about? And no shit, I get BlogTO, read some of their stuff. Great for articles, but I would not be taking my real estate advice from them, especially read the headlines. But one of the things that I highlighted for you is, what they're saying, they're looking at the HPI. Now they're saying that prices went up 1.2%, which again, I went through. It went up like a very, very smidgen amount, but the fact that we went up 20%, came down 20% is actually more of the story than the fact that we just went up year to year, 1.2%. But they're saying when you include the kind of seasonality of it, right? When prices were rising 2.8% per month, but now they've only gone up 2.6 in total. So that's kind of what they're missing out. And when you kind of read this, part I highlighted, it kind of reads a little bit funny. Now, the next thing is, the bottom line is that prices aren't following the same steep downward trend as sales are listed. So I don't know what numbers they're kind of referencing, right? Like prices are down about 20% from the peak. But if you're kind of comparing it to last year, then obviously, yeah, this is true. And this is why I was saying, you have to read the data and get the context of the data so you know what it actually means for you. Because in a market that's moving so quickly, you generally don't look at year to year of numbers because it's changed so quickly, right? Like think about where we were last year versus where we are now from the real estate market, or even just from the pandemic. It's totally different. So you need to look at the numbers, understand the context, have a little bit of critical thinking. I've been grilling this into all of my videos, and rather than just read headlines, because if you just read that, you'd be thinking, hey, prices are fine, right? read the whole article and understand the context of the data so you actually know what's going on. Now, if this is the type of content you enjoy, make sure you help us spread the knowledge out there by smashing the like button and subscribing to the Prime Property channel. We're almost at 10,000, so thank you very much for everyone who's subscribed so far to kind of expedite that. And as a bonus video, what I'm going to do is once we hit 10,000, I'm going to answer any kind of questions that you may have for me, whether it's about me or your kind of portfolio or what to do, what to expect. You can leave them in the comment section below. I'll answer them in that one big video, or you can send an email to that email right here, and I will respond and jot down your email. And if you want it to be anonymous, just, say anonymous. I'm not going to kind of call you out on anything, right? And obviously, if you're kind of looking for some more like, strategic help because you're trying to navigate the market and you're about to transact in the real estate market, you can do so by booking a link with me, booking a call using the link right here. It's www.chatwithzen.com. Now, back to the next article. This is not really an article per se, but it's more of the release marks of what's going to happen. So I'm going to try to be as PC as possible because I feel like if I say negative things, my board will come after me because it's not the first time. But let me try to smooth this out as much as possible. So you got here saying that TREB, who is the governing board, right? Remember, these were the guys who fought to the Supreme Court to hold the data, right? But, they lost. They're trying to maintain that OFC mortgage stress test should be reviewed in the environment. So a few months ago, they were saying that they're going to try to kind of lobby OFC to review the stress test more often because they were only doing it once a year. But because, again, I was saying the market has changed so much in a year, we're looking at stats month to month, like as usual. And they want to be able to review the OFC test because when the OFC test stress is kind of messing everyone up, the amount of transaction goes down. And you have to remember where these real estate boards are coming from. Like they basically are trying to protect, us, realtors' best interest, meaning more transactions, right? So if that's messing with business, it's in their best interest to kind of lobby. And I think the Toronto Real Estate Board has quite a bit of lobbying power from what I can tell so far. So I would not be surprised if we see an OFC stress test change because they were already talking about it before because now everyone has to go past the stress test of the higher rates. So I'm not surprised if that comes in. But here's kind of the kicker. I don't understand this comment specifically where it says there has been a shift in consumer sentiment, but not market fundamentals. That's kind of like sugarcoating how poo-poo the market is right now. And like I've just always said it as it is, it's very poo-poo. I don't think the sentiment has as much of an effect. Okay, let me rephrase that. I don't think the fundamentals have not changed. They most definitely have changed because the environment in which we are changed. Maybe, I'll give them the benefit of the doubt, what they're kind of contemplating is that the immigration and the lack of supply and the fact that we're building so slow has not changed. But that is not like a 1 or 2 year kind of duration lookout. That's more of a 5 to 10 year lookout duration. Because to me, the fundamentals have most definitely changed and the sentiment has most definitely changed as well. Because we have, call it, low supply and people aren't transacting right now. And I talked about it in the Market Watch video. We actually have really, really low inventory. I would agree with that if that's what they're referring. We have low supply and a lot of people coming in as a market fundamental, but they should really be specific about that because it kind of implies the wrong words, right? And then the last thing, this is actually the most important thing, right? If they are going to be lobbying, here we go. Longer mortgage amortization periods of 40 years on renewals and switches should be explored. Said it like a year ago. When prices get too high, it's irrelevant about the income to the price of the asset because it's about how you finance this, right? The monthly payment. So way back in 2008, we had 40-year mortgages. And then I think we went to 35 in like 2010. Don't quote me on that, but it's something along the lines of that. And then we eventually went to 30 and 25, right? So I would not be surprised if we brought back 40 because what happens is when you're, say, like a 25-year mortgage, when you're insured with CMHC versus 30, your payments go up like 10 to 15%, give or take. So every 5 years, 10 to 15. But if you add another 10 years, you could reduce your payment by, call it like 20 to 30%, which means instead of, say, paying $2,000, you're now paying $1,400. And when your banks look at kind of your ratios per month, you're like, oh, hey, instead of using $2,000 as a monthly mortgage payment, we're using 14. So therefore, everyone has more buying power. And now we have kicked the can down the road. I would not be surprised if we have kind of like mortgages that can be passed on to generations over generations because at the amount of debt to GDP we have globally, the market, the economy is just messed up, right? So it's just how much debt you can accumulate. So are they going to lobby for 40-year amortizations? Yeah, probably. I've been saying it for the last year. Is it going to come anytime soon? No, but the fact that they're exploring this and the OFC stress test is telling me that If they think inflation is going to be non-transitory and they're going to continue keeping it this way, yeah, you know how you can stimulate the market? That stuff. And they're already doing it because real estate board. Anyways, yeah. Don't come at me, guys. So the next article we got is Toronto properties listings are being canceled at unprecedented rates. Totally true. Talked about that. We have unridiculous amount of kind of terminations. And they're basically saying here since the start of 2022, sellers are not getting offers that they want amid kind of crazy market conditions because it went really well, then it went really bad. And then now they're starting to terminate a lot more, and they're seeing 643% increase from 380 cancellations in January. So again, I actually went through the terminations, not specific condos, but in the entire market in general. And it is quite a bit, like we went from like 300 to like 6,000 or 7,000, which is quite a lot. But the idea here is that, most important thing, if sellers are choosing instead to rent out their properties as rental demand in Toronto rises at the fastest rate in more than a decade as vacancies plummet. So when you can't get the price you want and you don't have a need to kind of sell your property because, you can handle the finances and the rents are going up, why would you, right? So I can give you kind of an anecdotal example. We had a client who wanted to sell, and they were like, why don't you try on the rental market? Because we're saying you may not get the price you want on the first resale market, and it's a condo. And then we listed them both simultaneously. So what happened was we got way too many offers for lease at way over what we were expecting and 1 year's rent upfront. And we had like 2 showings for sale. So obviously take the lease. You've got an extra 1 year's worth of rent right there. You can subsidize it and just move on, right? So when you kind of look at that, it's a structural issues of people aren't buying. And I talked about it first, whole funnel of people coming in of why you need to rent. And it's a structural issue of low supply generally, right? Because if we didn't have low supply, you wouldn't see the rents spike up the way they would, right? Obviously seasonality, there's a lot of factors, but it is kind of a structural issue. And maybe that's what kind of Trev was talking about, market fundamentals, who knows, right? And then this one's kind of freaky. It's stuff like this that I read that caused the Wynne government to put in rent control. It's absolutely wild. I hate that they're putting this. So we rented a 2-bedroom and a den in the Liberty Village area for $2,500 around this time last year. Sounds about right. Maybe around pandemic kind of renting prices, assuming it's like 900, maybe 800 square feet. And now we serve the tenants with a notice to increase the rent to $35. So I don't know the full context to this, but in my mind, you cannot legally do that. And I really hope that doesn't go any further. But if it is a new condo, so that's what I'm saying, it's assuming maybe an 800 square feet one, meaning that they're not under rent control. Yes, they could definitely serve an N2 to increase rent as much as they can. But it's shenanigans like that really have a really bad rap for landlords. But, obviously they're saying that it's still a few $100 under market rent value today. So I'm just going to leave it at that. I just hope this doesn't blow up when we get rent control. I can tell you we have condos ourselves personally and new ones, and we didn't actually increase the rent on our tenants. We just left it as is just because we know they were struggling and we could probably handle that a little bit more. But that's just me being me. Even if I were to increase it, I would not increase it by $1,000. That is a dick move, but to each their own. To each their own. And then we got the last article over here, which is mortgage affordability. Can't even speak anymore. Mortgage affordability test scrapped by Bank of England. Here we go, right? Someone further east of us is having all this that's said and done, kind of comparing us to Australia. You can see that basically that their stress test, which, we very much get ideas from, the motherland, right? UK, the queen. And when rates went to 3%, people were not able to qualify in the stress test. So now they are removing it. Now, here's a timeline that they had. They introduced a stress test in 2014 as part of a wide-scale tightening of the mortgage market to ensure that there are no repeats of the mis-selling scandal that partially contributed to the 2008 financial crisis in the US. Perfectly fine. So ours came in 2018, and people are trying to talk about scrapping the stress test because central banks all around the world are increasing rates. So if the purpose with the stress test to make sure people aren't, spending way more than what they need to, why are you removing the stress test in an environment that is inflationary where their, cost of living is going to go up? Right? Or is it because banks make money by lending money out? No one can qualify with these stringent rules, so therefore they need to remove the rules because they need to get the profits going. I don't know, just food for thought, right? So this is why I'm saying you really got to read things and kind of think about it critically about what's going on. I would not be surprised again if the stress test gets removed. I actually think that's probably going to be an easier thing to push along than 40-year amortization. They can probably just drop the stress test a couple points before fully removing it. And then if that doesn't stimulate the market, if we're constantly getting an inflationary kind of environment, then maybe we can increase amortization before scrapping this, right? So again, there's a lot of things that like central banks and like the governments can do to kind of stimulate the market, even though it's inflationary. And you just have to remember, real estate is Canada's GDP. It's funny, I'm making a joke about it, but it is very, very true. So when the entire real estate market slows down, like I told you, sales volume is down 50%, right? What's gonna happen to taxes, right? So again, I'm not surprised if some of these things come down the line, but it's just not saying that, all these things are gonna happen really quickly, because there's probably still some amount of pain to be felt in the short term, but you just gotta be able to ride it out long term, right? And ultimately for me has always been long term, buy, hold, because they're devaluing the dollar. And by holding and getting mortgages that are set, as long as you can carry it with cash flow and positive properties, or being able to pay for your wages with your kind of own income of your primary home, then what you're doing is you're paying back future dollars, which is going to be worth less, but you set in what your debt is right now, right? So if you imagine paying off a mortgage from 20 years ago, it's a lot smaller because we have so much more money in the system. Imagine what it's going to be like in like 20 years, right? So that's kind of the basis and overarching thesis of what I think about when it comes to real estate investing. Not everyone subscribes to it, but that's why I'm always like buy and hold, just weather out the storm, right? And I've been telling a lot of my clients right now to be on the defensive. Now, if any of these kind of concern you and you're kind of worried about what's to happen, whether you're trying to transact in the real estate market, whether you're not sure if the bottom's coming, maybe you should start looking to buy, or maybe you're trying to get rid of the market because you're freaking out. Everyone's got their own baseline of what their fear is and what they're trying to do. And if you have to transact, you have to transact. But you want to do it smartly. So what you can do is just book a strategy call using the link right here. It's www.chatwithzen.com. We can just chat about what you plan to do. Does it make sense for you personally? And we kind of usually tie in the rationale data plus with what you need to do in an emotional side and see if it makes sense for you to transact. If not, I'll tell you not to, right? That's just generally how we've operated, because we value kind of what we provide to our clients first rather than just trying to get a transaction. That's just not how we operate. Anyways, until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.